Morning, ladies and gentlemen. I think the first two key addresses that we had uh, is a great curtain raiser for the event that we have today. And some of the very pertinent issues for the industry, for the country, has been touched by the respective speaker. We have very eminent panel in form of four speakers that we have. They don't need any introduction. We all know them. And possibly I would like to start the discussion with a simple thought in mind that a couple of days back there was a news article all over media of Airbus taking 650,000 square feet area in Bangalore. So India shining story is a reality and everyone's talking about the economy. Everyone's talking about GDP growth, everyone's talking about availability of skill, better technology, India becoming rather than a backward hub to an innovation hub. All that, what does it mean for insurance? So maybe Kamlesh, I start with you in terms of the economic development that we have been seeing and in terms of all these news items, skill availability, technology availability. Where do you see life insurance deriving benefits out of that? And like Prashant mentioned a couple of minutes back, distribution still remains a challenge. No one wants to take an agency upfront and sell. No one talks about one fine morning getting up and saying insurance is something that I need. Term is only 15%, in real coverage. So do you think that all these advancement which is happening would actually create a glitch for the industry and some dramatic difference coming out of that?
Thank you, Amit. To start with me, I'll pick some stuff from what member said and Prashant said. I think what does this mean if you translate into numbers? I think is extremely important. We do about 2 crore to 2.5 crore policies. Insurance for all by 2047 will need us to sell at least about 6 to 7 crore policies. So we're not talking about small numbers, we're talking about significant jump. Some of the key things that I think are happening which will lay the ground for these to happen. I think one of the biggest one is Bima Sugam. Yeah? I don't think anywhere in the world a platform of this type has been created. And we are very hopeful that will bring to cover what is not covered at this point of time. Because what life insurance companies need is a standard product distributed through a set of standard distributors on a platform where everybody can reach and access to. It's not something that individual life insurance companies can do. So the regulator and life insurance companies coming together creating Bima Sugam is going to be a big facilitator. The point that Prashant made, all of us want to go to the underserved population, but I don't think it's just the product. We need an ideal combination of the product and the relevant distribution channel. Because today none of my distributors want to sell a 5,000 premium product because their commercials depend on the size of the premium. So if I create a product, I don't know where it will get distributed from. So I think the bigger issue apart from the product is the distribution. Hopefully Bima Sugam will create that opportunity. Awareness is extremely important. Prashant did give me credit, but it's the work started by him 2 years back, and we are hoping the industries come together. We will hopefully create a campaign similar to the mutual fund Sahiya. It will roll out from February onwards. We hope we'll do a better job at that. I spent some time with my partner in Sun Life in Canada, and I told them that you guys may have developed physical infrastructure, perhaps better than what India has done, but I don't think there's any parallel of the digital infrastructure that India has created, whether it's OKIN, whether it is ONDC. We are talking about Bima Sugam right now. Yeah. And my view is that digital infrastructure will pave the way for this dream of what we want to achieve for insurance for all by 2047.
Thanks, Kamlesh. Alok, coming to you with the obvious question that we also heard about challenges of the industry around affordability, access, and of course, the ability for people to reach out to the right provider. Now we know that everyone's talking about technology, AI and all of that. What role do you think that, like Kamlesh mentioned just now, Bima Sugam and of course the emerging technologies, that's going to make this sector affordable, or do you think that it will get some attraction from the people, particularly in forms of getting new distributors? Do you see some change?
Yeah, Amit, I think just extending because these are all interrelated. See, we have been discussing about what is the right product, right? So the triangle for me is what is the right product segment, what is the right customer segment, and what is the right distribution segment, right? If you know this triangle, you know where to reach, how to reach. Now, when we think of going to tier 2, tier 3, tier 4, today's distribution structures are costlier. Now, can the technology reach there faster? I think that's where AI can be there. Say, for example, I don't believe in life insurance everything can be completely online. There could be some products, some parts, but not all, because the customer still needs a conversation. But instead of a distributor, there could be a conversational AI which can start conversations, right? Which can give information. We spoke about awareness, right? Information, knowledge for the customer to take the right decision. So technology can play a big role in penetrating and creating that awareness. Maybe it could be a first point of interaction. You may still have a physical interaction to close the discussion, right? Because I don't think technology will replace people as such. But it can solve a lot of your complex problems. For complicated ones, human beings are needed. Right? So if you differentiate the two between complex and complicated, let AI do the complex job. And when it has to hand over for complicated jobs, human being can be introduced. But it can increase the speed of penetration. Your reach could be faster, easier, smoother. Every Indian now has a smartphone. A lot of people are native. Like the generation which is getting into insurance is native, right? So 25 to 40 is going to be more native than we were. So they are already there. It's a matter of fact that how do we reach them? And I believe AI and Gen AI is the next thing which can help us reach them faster and in a meaningful way.
Great. Every time I get to host this panel on ET Insurance Summit, I post it on LinkedIn and people actually reach out to me with questions. And many of them are actually could be innovative or could be unrelated questions. But I think as a moderator, I have that responsibility of getting some reflection from the eminent panelists. I know that Tarun, I did not share this question beforehand with you, but just in case, and it's a little forward looking also, just in case composite that is getting talked about as a license, and we just heard from member IRDA also, good story is that 70% conversion of retail. Life as a sector definitely has got a more distribution power in terms of reaching out to the category of areas that also Prashant mentioned. So how composite change the landscape in terms of affordability, reaching out to the last mile? What are your thoughts on that?
Yeah.
I mean, as and when, if it comes.
Yeah, I guess it's on its way. Maybe Deepak can throw more light on that. But of course, we'll get to know when it comes, in what form and shape. I think one thing that it does, the composite license, is that it moves the life insurance sector from being a death benefit pitch to a lot of allied areas, which are in the living benefit space.
That's a great point, yeah.
Yeah, and that is what, this is a conceptual point. This is what the general insurance products, if I can just use it as a bucket of thought process, brings in. So asset covers today that we can have usually are only around death. But the customer is also bothered about loss of income, loss of job, could be many other things, fire. Can we bundle things up? I guess that will, while the core offering remains death still, there are a lot of these slivers which can be added to it. I think that will shift the paradigm, and it becomes hence more reasonable that, look, in my living time, I'm going to get XYZ benefit.
Yeah.
Otherwise, it's always that मैं पैसा डाल रहा हूँ और किसी और को मिलने वाला है. So it's not really much of a draw. And if I just look at that data point, if you, I mean, Prashant mentioned a few things, but if you just look at the number of policies on term, retail term that are sold, last 2 years they've plateaued. 14 lakh policies is what the sector has sold. It used to be 20, 21 lakhs during COVID. So it's actually come down after that.
Absolutely.
So how do you keep coming up with propositions is hence what this allows us as a window of opportunity. So that's on the composite side, but you asked a few other things as you went along. I think while IID has been very supported, and I know there is some discussions happening there, all said and done, we've had only 4, 5, so to say, models. One is agency,
Yeah.
the other is corporate agency, the third is MFI, fourth is POS. That's it. I think when we talk about India and we say that it's not one India, if it was China, it is different. People are more homogeneous in their thought process. It's a different world. Here, everybody's a free thinker in his own right, in his or her own right. And hence, just going with these 4, capsules in which you have to put everything.
True.
How can we make a grocer? I mean, if you tell a grocer that boss, आप agent हैं, तो या POS agent है, आप ये type का product ऐसे करके बेच सकते हैं.
Correct.
I think POS was designed towards that, but maybe there is more to be done. So those incremental pieces that yet have to come, I guess, will kind of shift. While I agree with whatever, Kamlesh has said, whatever Prashant said, Alok just said, the sector will do and can do, and every year is doing something or the other. But if you really have to get a paradigm shift, it actually for the financial services sector has to change the goalpost. And that will come from a lot of regulation.
Thanks. That's a great description of what if kind of a thing. And with that, Prashant, coming to you, that we spoke about availability of technology and all of that. You also spoke about not enough coverages in rural India. And I think you also touched upon the trust, and member IRD also touched upon that, very core to our philosophy as PwC. I think trust is something which is missing from all quarters. In some way or other, probably the consumers perceive insurance intangibly, yes, but exactly what we do not know. Product is complex. Disclaimers are almost given. Now in that, I think brand is playing a large role, and I am aware of the fact that you have recently had to undergo a change, and not easy one, because definitely, from an established brand to the new brand is a leap of faith that you have taken. Right, wrong, that's not the debate. But do you think that trust, brand, all of that, in a way, is playing innovation or playing something in the mind of the people who are thinking more than affordability and getting into, buying product from one particular insurer? Any thoughts on that?
You raise a very important point, Amit, and trust is a notion. It's very hard to define what generates trust. But at a very high level, if you think about what generates trust, whether I know this brand or not, first. Second, does this brand honor the promise that it made to me? Second. And third, is the behavior of this brand consistent or not? Which means you're doing what you said and you do it all the time. Those are 2 or 3 things that drive trust. And I think in the context of life insurance, all 3 are important, but first 2 are more important. A, whether you are known or not, whether you're seen or not, whether I have come across you or not in some shape or form. And that plays a big role. But more importantly, whether you honored what you said or not, that generates trust. And that's where the ability to pay claims, honoring everything, the customer service promises that you made, whether you are promising or not, the level of mis-sell, which means wrong representation, those are things that actually build or erode trust. And from all perspective, I think the insurance industry, not just life, but all 3 forms of general insurance as well as health insurance, have to focus a lot on building the trust. Coming to Max Life Insurance, I think, or Axis Max Life, I think Max Life Insurance is a big brand. We worked on it. We created a good brand. But really looking 20 years and 30 years down the line, from at least from operating companies, or my perspective, as a brand, you prepare for future. I think the growth is going to come from tier 2, tier 3, tier 4, smaller cities. And, no points for guessing. I think the brand that Axis carries is stronger than what Max carried. We all know that the logo that Axis carries is stronger. So we made a request as management to both the set of shareholders for a brand rejuvenation, and I think they were very gracious to accept that. So I'm very happy about the changes that we have made, and I'm sure with the two brands coming together, both of them having very positive perception in the market, it will do good to Max Life Insurance becoming Axis Max Life Insurance.
Thank you so much. Kamlesh, coming to you with that, on a related aspect of brand innovations and all of that, I think one of the perception about the industry that the industry doesn't make margin. And if you very honestly ask the audience which is sitting there, if it is a Ola IPO, Ola scooter IPO or something like that, majority of the people would have applied for that. But if it is an insurance IPO, people stay away. And somewhere the perception is that, we are defensive as a product and the operating cost is very high. Now with technology, with regulation changes, with variety of things happening from the policymakers, was the margin story in case you would like to talk about that. And follow up to that, is there a defensive approach because we don't sell terms? Somewhere I think industry is a little, I should not say defensive, but somewhere a little tired in terms of talking about saving products. And I don't know why it is, because they have actually delivered a lot of good returns on whatever has been sold so far. Your thoughts on margin and then product?
I just wanted to take 30 seconds to say, Prashant spoke about trust and you asked that question, but you must not forget that I came into the world of insurance during COVID. And I think the very few people of our generation have seen a 1 in 100 year scenario of COVID. And we saw amazing amount of claims to be paid. And I feel good that I belong to an industry, and I think these guys have spent more time than I have done, but I feel good that I belong to an industry at that point of time where we have supernatural claims, and every life insurance company, every company paid all those claims, and no regulator or government had to bail us out, and we still stand great. So I think that trust we delivered even in the 1 in 100 year,
we should clap for it, yeah.
1 in 100 year scenario. Because we keep asking this question of trust, and I think it has been demonstrated by the life insurance industry. We don't speak as much. I think we should do a little better. Yeah. Margins. I don't know why somebody would put money in a Ola IPO and not put in an insurance one. I'll take the question from that perspective, because the only listed guy is the man on the right at this point of time in some form. And others have been called to say, when will you have a listing ambition to play in the marketplace? I think regulation and margins have not been conflicting. Okay, to me, out of every 100 rupees that last year the entire life insurance industry paid, we paid about 9 rupees for death. Yeah, the balance 91 rupees we paid to people who were living. Which means we paid them towards maturity, we paid them towards benefits. We compete on products as an important asset class on savings. It's very difficult to get a deposit beyond 3 years and 5 years, and we sell products where we give guaranteed returns for 30 years, 40 years time up till now. So I think the complexity of the products that we offer is to that extent simple, because we sell it in a fashion to say, you will give me this and I will give you this guaranteed for the next 30, 40 years. So I think we have a great place to play in that situation. And all companies today, whichever are listed, unlike anywhere else in the world, it is listed as a multiple of your embedded value, yeah? Which is the PE multiple that you get for stocks in, we have a different way of getting the multiple. Anywhere in the world, you'll see PE multiples of 1.2, 1.3, 1.4. India is the only place where there are life insurance companies getting embedded value multiples of 2.5 and 3. Yeah. So for all those who haven't yet put, I would say, and hopefully for the upcoming IPOs, I'm preparing them for saying they can put money in life insurance companies. But I think margin, like Alok was mentioning, if the regulator's impression with us is that in the expense of management policy that they bought in, the idea was to say, can you keep bringing your expenses down and you can make sure you pass on the benefit to the customer? I think that is something that we have to work on. We have to embrace technology to make sure margins remaining what you are comfortable with. As you bring your expense down, is it possible for you to create better products which can mean better returns to customers over a period of time? And every company works on margins through efficiencies on cost to income. Banks do that at different points of time. And I think that is the expectation of insurance companies. Keep bringing your expenses down, distribution expenses down, and put that money back into the customer's pocket to make sure he gets better products.
Thank you. Thanks for the candid answer. Tarun wanted to come to you.
Can I add to it to justify what Kamlesh has said? Look at term. Term, we have the cheapest mortality in the world, right? How can you offer the cheapest? Because
Also
that's the
health.
pricing. So there is a cost embedded for every product.
Yeah.
So if we have the cheapest mortality on term, then we are passing the benefit back to the customer, right? Some products during COVID, the price went up, like GCL. They are already normalized. So there is it's a marketplace where there is a buy and sell market, right? So the demand and supply will always determine the price.
Yeah.
You cannot be on one side of the fence any day.
And I think we also heard about the reinsurance capability.
That's what I'm saying. So with those things now, that rebalancing is happening, and it will happen further as the scale goes up, as the reach goes up, and as the awareness goes up of how to manage that, it will normalize more. It's just a matter of expectation.
Tarun wanted to touch upon this fact of missing metal that member IRD also spoke of. And somewhere, in spite of generating, good returns for the customers, the defensive attitude about not talking enough about it. I don't know, people love to talk about term protection and all of that, protection gap. Somewhere I think it's good that even, by default also, if you are starting some amount of insurance coverage with a saving linked insurance product, which historically has given a great return, some innovative stuff is coming. So anything that you think that technology or policymaker can induce or jointly do something like an NPCA, I know Bima Sugam is coming, but how much of that would actually aid innovation on product to make it win-win, both for the customer as well for insurer, in terms of the point that Alok also mentioned that, and Kamlesh also touched upon, can you reduce the acquisition expense, and any story on that, Tarun?
Yeah, I think it's something that not is yet solved, as Deepak also said in his presentation, and it is something that nobody is really addressing. Maybe LIC to an extent still is, and that is coming in from the average premiums 15,000 to usually everybody else is in the 1 lakh category.
Yeah.
Product innovation surely is one bit. Cost reduction is surely another one. Platforms like Bima Sugam, where you have, Bima Sugam, while it gives a lot many things, it does give ease and it gives trust. Because here is the entire sector coming together and kind of sponsored by, the government through IRDA, and putting on a platform the product that you see otherwise on the website, hear from an agent, or you also see from on this sponsored website of sponsored platform from IRDA. I think the problem is multifarious and solutions may not be one, but it will always have to be sum of parts. It can't just be one big 6 that you can score here. And I think the one piece usually that comes in this space is the cost of acquisition.
Yeah.
So hence everybody wants a larger, ticket size, and so that there's enough commission. And honestly, that commission is well earned. If you just look at the fact that an advisor possibly has to go 3 to 5 times before selling a policy, and maybe after selling a policy, service it for life, then I am not so sure, whether how much money does finally the person make if he's not always getting the first year premium. So, an auto rickshaw, or auto rickshaw, car, whatever you take and go, it takes so much time and cost, and it's not easy. So a lot of these portions have to be, efficiency portions have to come in. How much time is somebody spending in the efficient part of the business? So I had done one thing when I was earlier in another company. 28% I figured out of the time of the sales team was only spent in front of the customer.
Wow.
The rest was all wasted in back-end stuff, underwriting, talking to people and getting the issuance done, or a lot of other bits and pieces. So I think the sum of parts has to come in play there and bring down the innate cost of, and that is where technology, the point that Alok made, that what technology can do. Unfortunately today AI is not talking about, or Gen AI is not talking about models where we can increase revenue. We're talking about more call center cut kar dete hain or something like that. It's not really so much on revenue efficiencies coming in yet. The models aren't there, but there's a lot that we can do maybe. The other piece is the MSME as a segment.
Yeah.
What my data tells me is that a significant percentage of employment is through MSME. A significant part of India is self-employed. That may or may not be missing middle, but at least to a reinsurer or somebody who sees KYC documents, it'll appear like a missing middle because
It will be easier.
what is declared and
Correct.
all of that is always an issue. So using, and if you go to a reinsurer, mostly they will be very happy trying to do salaried than do self-employed.
Absolutely.
So these are parts that we have to solve for. Can they be solved for? Yes, of course they can be. MSME maybe working through the banks can make a big difference. They do have the access. The cost of acquisition can come down with them. Can we have coupled in products with them? The distribution costs otherwise, like I was trying to explain to you, but ticket size coming down becomes tough. It's the same issue with health. I mean, why don't banks sell so much of retail health? Because the ticket size is far lower. They'll rather sell a life insurance and earn some commission there and not so much here. Although that is a repetitive commission which comes every year. And eventually they'll end up paying more or getting more, but they'd rather see the cost of acquisition. So there are these things that we have to solve for. If you want to sit down on a problem-solving discussion, that's a different discussion. But then this is where I think we need to find solutions for. I just leave it there.
I think very, very honest answer, and thanks for citing that. Prashant, with that, wanted to come to you. If missing middle needs to be touched, you spoke also about awareness and all of that. We need a larger distribution system, process, and much more than whatever. Now, somewhere the financial risk is lost in the knowledge of the people, and nowhere it is getting taught. We don't have insurance colleges. We don't, so many engineering colleges, but insurance is emerging as a good employment sector. But I have, if I have money, I'll start an insurance college maybe, because that's something which is, but somewhere there's a lot of lack of knowledge in terms of financial literacy. Now, while as an industry you are doing so much, anything that you are doing in terms of inclusion of that as a part of academics, we still read about, Mughal dynasty, but no one talks about insurance. Your thoughts on that? If we have to touch insurance for all, what's that policymaker can do on that? And member IRD is sitting here, maybe, that goes as a request to him also.
Make a very relevant point, Amit, and thank you for raising. All of us, we could reflect on the education that we've been through and what percentage of that we use. Yeah. It is very limited, right?
True.
I think there is work that needs to happen, but that's a separate discussion. But I think coming back to the frame of awareness, one part is life insurance, general insurance, health insurance companies stand at the top of the roof shouting that you need to buy, you need to buy, you need to buy. It has impact, but limited. I think we just need to think through every step where we need to get to a prospective person to make that person aware. I think I always say immediate gratification drives demand, and demand drives ownership. Unfortunate reality of life insurance, general insurance, health, there is no immediate gratification. So how do you cover for the immediate gratification part? It can happen only through education, knowledge, awareness, telling the person that this is required, right? It generally comes with education. And hence, the point that you raise about having this as a part of curriculum becomes extremely important. We have insurance institutes. You could count them on these 3 fingers.
Yeah.
It is not a part of curriculum anywhere.
And it's not glamorous. I mean, I don't understand. People send their kids, for medicine, chartered accountancy, anything, but hardly anyone.
तो वही बताया ना, जिंदगी में जो ज़रूरी है वो हम पढ़ाते नहीं हैं. Like I mentioned to you. This is a very important thing. And, can life insurance as Axis Max Life Insurance, can I put that as a part of curriculum? The answer is no. I think all of us collectively need to lobby for it, understand the need, and make that as a part of curriculum. But is it possible? I mean, having a few hours of life spent about understanding the risks that life offers and how to manage them effectively is extremely important. For example, I'll tell you a small story. I was a young father of twins, and one of my colleagues, very young person, died. And I was very scared, and I didn't know about life insurance, so I called my agent and I said, give me something that takes very less premium but covers me for very large risk. It's a different matter that he ended up giving me endowment, but what I was looking for was a term plan. Unfortunately, I had never heard of term plan. And I studied at the best of education institute. So I think your point is very valid. We need to lobby, we need to work and make that as a part of starting blocks of our development so that the immediate gratification part is taken care of by education and knowledge.
Let's have a quick, 2 minutes run, kind of a, because we have to save some time for the audience also. Kamlesh, your view on, technology is good, data is good, but we have been also seeing a lot of challenges around data leakages and stuff like that. So much of regulations of cyber is still not enough. So is there something that industry is thinking collectively in creating the hygiene in terms of whatever integrations that are happening? Where do you see a possibility that can safeguard all the businesses? Because we also heard that, like Prashant also mentioned about IIB, now a national health exchange is coming, so a lot of more integration. Bima Sugam supposed to be there, but we are also honor of data, So your thoughts on that?
I think it's inevitable that data will become all available. I worry there are platforms on which that platform will know more about you perhaps than you know about yourself. I don't think we can move away from that. I mean, it's like seeing Bima Sugam comes on a platform and access happens to all companies. I know a guy who bangs his car more often or claims health insurance more often when he's subscribing to life insurance. So whilst on one hand, I think it is amazingly good for the risk management principle, but I think all DPID Act which is coming in, which emphasizes on the fact that you can do all of this only with customer consent. And I think that is something that the industry has to work on, to say you can't push the consent in an application form at the end of terms and conditions which nobody knows or gets auto-ticked. Regulations are changing to say when you do it, it will be required at that particular point of time. We recently faced an issue with CERSAI, as I'm talking 2 days back, when the CKYC went off the block because of issues related to somebody's usage impacted the entire industry at large. So those are issues that are real. I think integral, along with Gen AI coming in, I think the data models have to be fully appropriate. Integration points is where failure happens, and Bima Sugam will work on perhaps 28 to 30 integrations of different types, so you got to be careful about that. Yeah, but I think at the core of it is going to be customer consent built in the right fashion before you execute anything else is going to be important.
Thank you so much. Alok, quick one in terms of all these RBC and IFRS 17 story. Everyone's kind of scared of, doesn't understand much, but overall the transparency that it gets in, because your background is so much of finance. So any positive stories emerging out of that? RBC should definitely, right?
I think both are important. The IFRS is important because you want to be global. So how do you look at our performance versus global peers, right? And it's a very different way of recording and performance management compared to the way we do it in India. See, we already in an industry where we use EV and not PE for multiple. So there is already complexity. Now when you look at global peers and you want to see how are you performing, because people will invest in India, if FDI becomes 100%, the expectation is more money will come. They will like to see your performance on the global standards. So you will have to migrate there. I don't think there is a choice. The good part is the results are very fascinating. The way the global reporting happens versus the local happens, it's a very different chalk and cheese game. And then RBC has to complement as well.
Yeah.
Because as you go into deeper markets and as you go your strategies which are differential in terms of what risk you want to take, your capital ask will have to be different. The regulator itself is proposing to say having different capital structures for different kind of companies and all. That dream will be only successful if it is backed by RBC as well. Because if your structure is different, you're going to be a different company or you're going to operate in a different market or a niche or whatever, then the capital structure has to be different. So RBC and all are going to be a driving factors to exponentially grow the path we want to go in with all this variety which can come to say you can operate in a state, you can operate in a distribution, you can operate in a market. These have to go all hand in hand. I don't think there is any choice there.
Tarun wanted you to touch upon something where in the name of disruptions, we also see a lot of insurtech players and so-called insurtech players. I'm saying so-called because the regulations are much, much lesser, hardly any out there. So probably while the industry is grappling with so much of regulations or, good or, maybe a little overload of it, if I am an insurtech player, I am perceived as someone who is offering the similar kind of product, but the regulations are not there. At the same time, I see some very intelligent uses of insurtech by all of you, and hats off to the industry in terms of changing. The digital transformation is no more the game. I think the digital adoption which is happening with your ongoing legacy system is amazing, and I think the industry deserves a clap for that, the way you all have done. So
They should clap then. I don't see them clapping.
I really cannot thank you enough in terms of the experiences
Maybe
that
they don't believe
insurers
it.
give.
Maybe they don't believe it.
Yeah. Because if you purchase any other white goods and what you get out of customer satisfaction and insurance is a much better story. So your
So
thoughts
see,
on-
disruption and then maybe fintech is the way I'll approach it. And there was a lot of talk of brand and awareness and all of that. See, what you have to understand, today do banks do any advertisement?
Yeah.
They don't. Because how does a brand get created? Not by putting an ad, not by putting Shubman Gill, not by putting somebody else there for some time. A brand gets created by interacting with a brand. How often do you interact with a brand? Life insurance, how many times do you interact with in your life? Once every year, maybe just, and that is also auto pay nowadays, renewals. So you do not build a life insurance brand easily. And then we require stories like the way Prashant has just put, and that's a fact, that when a claim happens, so there is not much interaction with the brand. HDFC Bank, ICICI Bank, and other banks require it because, you are talking to them every day.
Yeah.
Of course, the other way is when SIP happens with mutual funds, and because they align with the economy story. Apna bhi time aayega when, people will say, like the US, you don't have to talk much about life insurance because people are now in that, that cohort where they're saying, okay, we need to cover for our risk. We aren't yet there. Only parts of India is there maybe. So, hence again regulation, and I keep coming back to that. But what I do know is that the value add services, and that is where a lot of fintech play will also come. So, the larger disruption is when you are allowed to interact often with your customer,
Correct.
with your prospect. Can you, what happened in South Africa when Discovery did coverage around so many things, around gyms, or wherever you could see you could get a discount. And that kind of conceptual point is something that needs to sort itself out for, because you really cannot build a brand by putting ad and how much money will you put in here. We're talking of cost reduction. So with the VAS coming in, I think that's a very good thing that IID is putting it forward in this new regulation. That will give us opportunity. That will also give opportunity to have a life cycle relationship through fintechs.
True.
With an insurance plan. I can give you the usual answers, but I think conceptually if you solve for this,
I think,
then you solve for everything.
I know that, we only have 2 minutes left now, so wanted to save something for the audience also. And let me tell you the secret that I had actually shared a very separate set of points with all these four eminent speakers and ended up asking something very different because got carried away. So big hands for them for supporting me with all those odd questions sometime. Thank you very much.